Hello traders, this is Bruce for Spartan Capital Markets. Taking a look at the newsletter for this week, the weekly technical market report for Sunday, March 26th. So today we've got covered Aussie dollar, euro yen, dollar yen, Dow Jones, gold. And Dow Jones and gold are in geometric analysis. Starting with the Aussie dollar, you can see how the Aussie dollar has been in a downtrend. Made an attempt to go higher recently as it broke above out of this downtrending channel, which is bullish in general, but then relatively quickly find resistance around the 21-period exponential moving average, this long line. And now, as of last week, as of Friday, actually has broken down from a bearish flag. The bearish flag is represented by this rising horizontal here. And you can see each time it rose here, we have these bearish candles where it attempted to go higher, but by the end of the day closed lower, attempted to go higher, by the end of the day closed lower, and then we had the capitulation here on Friday. So the expectation is Aussie dollar is going lower unless we have some bullish price action that takes us back up above this 21-period exponential average and then above these highs. So that's a bit of room there. So this could be going down on Monday, or it could chop around before it goes around. We'll have to see. Because you do see that we bounced off the 62% retracement. So we could go back down and test that again, or we break through it and test the 78.6% Fibonacci retracement. That is Aussie dollar. Then we have the euro dollar. And on the euro dollar, you could see we had a nice rally past couple of weeks and completed a retracement at the 78.6% Fibonacci almost exactly before having a reversal day candle here, shooting star, which triggered Friday, bringing us back down to the 50% retracement. So what happens next in euro, it's not really clear. I would anticipate a bit more choppiness, consolidation before as it prepares itself to get ready to trend again. The buying sentiment within this rally here should occur again, because on this new move up here, this is the first leg up and it's very bullish, just like the first leg up over here was very bullish. So that's the expectation. And you can see how we're coming off a very solid bottom at the 38% retracement and triple bottoms. That's the euro dollar. Then we have the euro yen. Euro yen is a bit more complicated. It's not been trending that well really through this whole year. Hasn't been trending that well relative to other pairs. But let's take a look. Nevertheless, let's take a look at what's happening recently. This is a daily chart. We have this uptrend here. And after hitting resistance, we pulled back all the way to the 78.6%, which lines up with this uptrend, and we did that over 2 weeks. So on a 2-week basis, we have a double bottom. On the daily, you can see it's not that clear of a double bottom, but I guess it depends on how you want to look at it. It's a relatively wide double bottom, and where it is positioned within the overall price structure, I wouldn't look at it that way. But we do have solid support here, and that is important. And we did test that support because this day right here is the previous week, and then this is last week, and you see how we broke through support but quickly recovered. So that was it was clearly tested as support, and it's held, and we closed up here, I believe about halfway through the week's range, something like that. So we'll have to see what happens next in the euro yen, but we're watching the parameters of this trend line and this trend line here along with this downtrend line. So we have a consolidation potentially within this zone or trending within this zone. That's it for the euro yen. Then we move on to the dollar yen. And the dollar yen, a few things going here we want to pay attention to. Number one, we came off a double bottom and we rallied nicely, but only 38.2% Fibonacci retracement of this downtrend before we hit resistance that has taken us back down. Now notice what happened on the way up. We broke through the 200-period moving average, tested it right here and stayed above it, and that strength was confirmed by the 21 period exponential moving average as it crossed above it. Now we have weakness showing up as we pull back, and now the 21 is crossing back down below the 200, as well as price is clearly below the 200. So we are chopping up and down around the 200. In the near term, though, we have found support at the 78.6. Notice that's come up again, 78.6% Fibonacci retracement, which is also at the high of this double top. So resistance becomes support. And we have a reversal hammer candlestick pattern on Friday. So a breakout above that high should take us higher, up at least to the 32% zone or the 50% zone, or maybe even a test of the 200 period exponential moving average. That is the dollar yen. And the next we have the Hathaway analysis, which is geometric analysis, which is employing a number of proprietary as well as non-proprietary geometric related techniques to a chart in order to identify more significant pivot points, and in many cases that we would not notice otherwise. That's one way of looking at it. The other way of looking at it is maybe we do notice it, but this gives us additional confirmation on the analysis, a more traditional analysis we might be doing. I would say that's certainly happening with gold. So, but we start off with the Dow Jones Industrial Average, and I'm not going to get into how this is derived. I do talk a bit about it in the write-up. The bottom line is we have support along this circle right here, and there's a relationship mathematically and geometrically with previous highs and lows, which is where we have these highs and lows marked with the arrows, and then also back here, not marked with arrows, but it's related to the circles. Previous price action related to the circles. And so we have the current price action here, and what all the analysis indicates is that we're at a key pivot where if we break lower, and you can use last week's low as a support zone, we break below last week's low, there's a good chance we're going down to this 31,100, 30,900 zone or so. And if we break above last week's high, or I'm sorry, break above Friday's high decisively, then the odds favor a continuation up to these target zones. Now, notice that this first target zone at 35,158 is above prior highs. So that's a breakout to a new high. So that's a pretty big deal and not what is being expected out there in the market right now, I would estimate. And then we have a higher target potentially up here at the 37,317. And notice the dates. So this is all potentially happening because it has to stay within this circle to be valid, as it shows now, could be happening before June. So let's see what happened, but something to consider because many times what people don't expect to happen is when it does happen, that's when you get the biggest moves, the fastest moves. So something to keep an eye on. And we do have a relatively tight stop on that. And then finally we have gold. And gold, as many of you probably already know, the general sentiment on gold is very bullish. It has been trading very strongly. At this point, given the geometric analysis, if we do pull back, and we're not really getting too much into the pullback because the probability of going higher is very high right now, and the potential to break out of a 12-year basing pattern that happens to take the form of a cup with handle, for those of you familiar with that pattern. It's not shown in this chart. That's in the traditional chart. You can see that. So what we show here is that we've got any kind of pullback down to this zone here. It's around 18,900 roughly. I've got it discussed in the write-up here. Any kind of weakness should be seen as an opportunity to position yourself for this potential very aggressive move in gold into new record highs with a target of 2122 initially. So that is it for gold, and I will leave you to read this newsletter. Have a great week, traders, and that's it for now. Take care.